Well, today is a big day for the auto space because we kickstart auto numbers with Bajaj Auto later in the afternoon and Maruti tomorrow. According to a Nuvama report, demand momentum for the sector has been strong and will continue to improve. Nuvama, in fact, expects a 10% volume growth in FY24. Raghunandhan NL, the director at Nuvama Institutional Equities, joins us now to talk about that. Raghunandhan, good morning and thanks a lot for joining in. First, before I ask you about your own report, which is quite bullish on the sector, I wanted your thoughts on Bajaj Auto. The stock is at a 52-week high. It's done very well this year, but the numbers are not expected to be that good considering that exports have been under pressure. How are you positioned here and what's your outlook as we head into the next few quarters?
Good morning. Thanks for having me on the show. On Bajaj, firstly, taking up the positives, the domestic two-wheeler industry has been in an upcycle. It has seen a good growth in FY23 after seeing 3 years of decline. And we expect Bajaj to ride this upcycle even going forward. And we expect two-wheeler industry to recover to the previous peak only by FY27. So there is a long growth runway and Bajaj will be a part of it. In terms of exports, it has been a weak spot for the company, and we expect next few quarters also to see muted performance. Q1 and Q2 of FY24, we still expect exports to be on the negative side for Bajaj, and second half of FY24 on a low base, we expect some recovery. In terms of our view on Bajaj, we have a neutral view. We think in terms of overall volume performance, Bajaj is likely to see underperformance versus peers such as TVS Motors and Eicher Motors, mainly because of high exposure to export markets.
Okay. So you have a neutral view on Bajaj Auto, but you believe that the momentum is picking up in the domestic market and Bajaj Auto could ride on that. Got it. I was going through your report where you say that the auto demand momentum has been very strong. There's good replacement demand, there are new products, etc. But there is also this niggling worry about the monsoons, the erratic weather and the impact that could have on rural markets, right? So tell us a little bit about what your prognosis is and what are the top stocks that you're bullish on now in the auto space?
Yeah. With reference to the worry of El Nino, if you look at last 20 years, there has been 6 instances of El Nino. And in that, there have been only 2 instances where auto, especially tractor volumes, were impacted. And these 2 instances were severe El Nino kind of situations wherein the monsoon deficit was more than 10%. And also, there were other factors which did not play out favorably. What I'm trying to say is agri crop prices, agri credit availability, government support, these factors can influence and lead to a positive volume growth despite there being a marginal miss on the monsoon side. So even in FY24, we are expecting tractor industry to see a positive growth despite worries of El Nino. And Q1 of FY24 is likely to see double-digit growth, and this itself will support full-year performance of a marginal growth as per our thoughts. In terms of our top picks in the sector, the top 3 buys we have is Tata Motors, Samvardhana Motherson and Maruti Suzuki. In terms of our top sell, it is Bharat Forge.
Okay. Since you spoke about Maruti Suzuki being one of your top buys, I just wanted to talk a little bit more about that. The pricing of the Fronx was revealed and, the big story is that Maruti will regain a lot of market share because of its, its SUV launches. But the stock has not done anything this year. So far, it's absolutely flat. What do you think would be the big trigger for Maruti and what are you expecting in this quarter's earnings which come out tomorrow?
The triggers will be on the market share and volume side. Last year, we saw that SUV market share was at 20%. This year, considering 3 new products, Grand Vitara, Fronx and Jimny, we expect market share in the SUV space to go up to 25%, and that will drive up the overall market share towards 45-46% from 43% last year. The thought process is Grand Vitara, Fronx and Jimny together can do a volume of around 190,000 in FY24 versus Grand Vitara volume around 50,000 in FY23. So a delta of 150,000 units are coming in mainly because of these three new products. In other words, in our assumption of about 9 to 10% volume growth in FY24, only 2% is the growth we have factored for existing models, and the remaining growth is coming in from new product launches. So market share gain should be the main trigger for Maruti to do well.
All right,
coming on to the result expectation,
sure.
we expect a good number for company. Revenue growth of 21%, going up to 32,000 crores, and profits should be much stronger at 48% growth YOY, going to 2,700 crores.
Okay, got that.
EBITDA margin,
just very quickly, Raghunandhan, got it. We got the gist of it. So Maruti is one of your top picks. Very quickly before we let you go, your thoughts on Tata Motors. I agree that it's been a great performer this year, almost a 25% rise. But whenever it gets to that 450, 500 level, there's some negative news flow, something happens in the earnings and it gets back into that range. Do you think this could be the year when Tata Motors breaks out of that 500 rupee upside?
We hope so. Tata has seen 3-4 years of losses, and third quarter it saw a turnaround with profits, and fourth quarter we expect a very strong quarter for the company. And going forward, for us the key monitorable will be Jaguar Land Rover's performance. Volume has been strong at 95,000 units for Q4, and going forward, we think that doing a volume of 95,000, 1 lakh units per quarter is possible. And for the full year, volumes can be as strong as 370,000 to 4 lakhs. So this higher volume growth in Jaguar Land Rover, including margin expansion, EBIT margin consensus is building about 5% for FY25 that could see upgrades. So strong volume performance, strong margin performance, and debt reduction should be the drivers ahead. And our estimate is 11% higher than consensus, and we expect street estimates to be upgraded.
All right. Thanks a lot, Raghunandhan, for joining in and giving us your view on the auto space. We look forward to chatting up with you rather soon to get your insights, post the numbers as well. Well, let's move on and discuss the other stock.